Hello, my name is Braden Adair, and today I wanted to talk to you about trade market dumping. What is trade market dumping? Well, the book defines dumping as exporting a product at a price either lower than the price that product normally is in its domestic market or lower than the cost of production. And that leads to the question, why would a country or company want to do that? Countries or companies will tend to export these products at such a low price because they want to break into a new market. And a lot of times they actually have the intent of driving companies that are already in that market out of business so they can have the entire market share and start making more money for themselves. Which there are advantages and disadvantages of doing this. So let's talk about a couple of the advantages of trade market dumping. One advantage is selling it at such an unfairly lower price, because when you can sell a product at such a low price, people will tend to buy whatever's cheaper if it's the same product rather than pay more for it. So that gives you a leg up on all the other companies that are already in that market. And also sometimes these manufacturers that are exporting this product into that country will get subsidies so they can actually sell it lower than the cost of production, which, I mean, people are just going to buy it up if it's just that cheap. Imagine buying a Yeti cooler that's normally $400, but a company's offering it for $100. I mean, people, they go flying off the shelves. People, I mean, you couldn't keep them stocked. And oftentimes, a country will take a loss on whatever that product is because it'll create jobs for people in their country, which in turn boosts their economy and helps them out. Another advantage of dumping actually is for the consumers on the country that's being dumped into, because for the time being, as long as that subsidy continues, these consumers are buying stuff at a lower price than they normally would if they weren't dumping into your country. But there are also disadvantages to dumping. A problem with dumping is that it is very expensive to maintain. And depending on the companies that are in the industry or market that you're trying to get into, they might have some deep pockets, and it can take years upon years to put them out of business. So that's, unless you have the funds to do that, it's really hard to accomplish. And another disadvantage of dumping would be retaliation by that country that you're dumping into. Because if they figure out that you're dumping, they can actually place a tariff on the product that you're exporting, which in turn it defeats the whole purpose of what you're trying to do. And then the third one is censure by an international trade organization. Which, speaking of an international trade organization, the World Trade Organization, which the book defines as an international organization that enforces the rules of international trade. Since it actually is the World Trade Organization, almost every country in the world is a part of it and is a member of it. And it was created by the Uruguay round with three main goals in mind, which one goal was to help free the flow of trade. So, and my economics professor always talks about if people will start trading freely, it'll better help our economies. And say trade makes an economy grow. Another goal that it had was to help negotiate further opening markets. And then a third was to settle disputes among its members, which is almost everyone in the world. The WTO gets involved in settling disputes that have to do with dumping and the granting of subsidies. Although it settles these disputes, the WTO can't actually punish a company for dumping into a country because it is a company and not a country. The WTO can only respond to the actions of a country that retaliates against the company for dumping into their country, which the WTO will actually sometimes allow a country to retaliate if they can prove that someone is dumping into their market. And they have to be able to calculate the damages that it creates to its own companies to show that, hey, this company or country really is dumping into my market. I need to be able to do something about it. And which that brings us to the term anti-dumping. And the book defines anti-dumping as an additional tariff placed on an imported product that a nation believes is being dumped in its market. Which this tariff is actually the normal way that a country will retaliate to dumping. This tactic is only viable for about 5 years, though, unless they can prove that it needs to be continued longer than that. Which that goes back to saying that dumping is very expensive and can take years to actually do. Which the WTO asks for 3 calculations that you have to prove to be able to place tariffs on this exported product. And the first one is, what's the price of the exporter's product in their domestic market? So what are they actually selling it for over there? And the second one is the price charged by the exporter in another country. Okay, what are they charging for it in your country that they're exporting it to? And the third is a calculation based on the exporter's production cost, their other expenses, and their reasonable profit margin. If you can calculate all of these 3 and give them that information, they will allow you to put tariffs, like anti-dumping tariffs, on that product. Now that I've done a little background information on dumping and anti-dumping and the World Trade Organization, that brings us to the questions. And question 6-19 from the book asks, people love finding a bargain on their favorite items while shopping, but few people would likely want those items made in the home market, which, I mean, that would create a lot of jobs, if it means paying more for that product. And, I mean, it asks, do I agree with this? And yes, I do. Because people don't like paying more than what they think they should have to. I work at Sherwin-Williams, and I experience this all the time. People will come in and they'll see the price of our paint and they freak out. They're like, oh my gosh, how can you charge somebody that much for paint? That's insane. And then they'll drive down to Walmart that sells a cheaper paint, and they'll buy that, and they'll put 3 or 4 coats on the wall trying to cover up a color or trying to do anything, and it won't work. And then they'll come back to Sherwin-Williams and end up buying our paint anyways because we sell a better quality product. And they would have saved themselves money in the long run if they just would have bought our product first. But I mean, that just goes to show you that people care about price more than anything. And I actually did some research and found a Reuters Ipsos poll that showed that 69% of the people surveyed said that price was very important to them when they were buying something. But it also said that 32% of the people surveyed said that being made in the United States was important to them. Which, that's 70%. That's a lot. The United States has 300 something million people in it. So 70% of that is quite a few bit of people. Which this poll was done online, and not everybody in America did it. But I mean, research consulting firms and other polls have found similar results to that. And really, Americans, they say that they want products made in America, but when it really comes down to it, they're looking at price. Price is going to hold number one spot the majority of the time, and everything else will fall in line, like according to what they believe. Say price is king in America, and that's understandable. I'm the same way. I don't want to be overpaying for something just because it was made in America, when I can get the same product the exact same product for cheaper, for $10, $15 cheaper, whatever the case may be. And like Americans will often research extensively just to find a few dollars off. Oh, here, I found this here, and it's $2 cheaper than this website. I'm going to buy it here, just over a couple dollars. And when you think about it, look at Walmart. That is a massive company, and they are extremely successful. And they're successful because they know that price is key. Everybody wants to pay a lower price, and they've done a great job of that because they have the cheapest prices around, and they'll price match for you too. I know I often, if I see something that I want, I'll look at Walmart.com and see if they have it for the same price or lower, because often they have it for lower, and they have just about everything. Which people, they want to be smart with their money. They don't want to overpay for the same product as far as quality and just like how long it's going to last. And I mean, that's just Americans for you. Now on to the second question, question 6-20, which the book asks, do you think people from different cultures would respond differently to this? And when I got to thinking about it, I really don't think that they would. Because personally, whatever culture you're from, I mean, money's money. It knows no language, and people want to try and keep as much of it in their pocket as they can. Whether it be it's made in their home country or not, they're going to try and find a lower price. And the people say that they want it made in their own country, but when it comes to actually handing over the money, that's a different story. An example of this would be Europeans when they come to America. They go on shopping spree. They buy so much things because everything is cheaper in America than it is over in Europe. I mean, the euro to dollar ratio is pretty large, because it takes, I think, last time I knew it was like $1.40 for every €1. And I mean, I've actually experienced this firsthand because my aunt had a foreign exchange student that was from Norway, and she was always talking about how cheap the prices are in America. Oh my gosh, they're so cheap. Everything's so cheap, so cheap. And she would often go on shopping sprees buying pants, shirts, shoes, handbags. I mean, anything that she thought that she needed that she could get cheaper here in America, she would buy. I mean, she was buying stuff for her and her family members as well, because if they're paying 20, 30, 40% cheaper over here, why would you not buy it? And I can tell you that made in Norway did not cross her mind once. It was, hey, this is the same product and it's cheaper. I'm going to buy it here. And that's just people. Like I said, money knows no language. People want to keep it in their pocket at all times. And I mean, overall, I think that everyone wants to be patriotic. They want to support their own country. Yes, I would love to buy all American made stuff all the time. But when it comes down to it, I don't want to pay for American made prices. And neither does the majority of anybody else. So when it comes down to it, cheaper is going to win the majority of the time.